Hey everyone, me Kevin here. So there's a lot of crazy stuff going on with Tesla. We're going to talk about 3 lawsuits, one of which is actually great for Elon Musk and 2 of which are not so great for Elon Musk. And we're going to talk about this crazy rumored 20-for-1 stock split for Tesla. That's right, in case you have not yet heard, take a look at this, folks. This is a notification of corporate action for a security held in your JP Morgan account. Numerous people have indicated that they have received this document. I have not received this document. I do hold Tesla shares at JPM. Who knows, maybe it's in my mail, but I have not seen it yet. Anyway, multiple individuals are suggesting that they have gotten the same letter saying that the preliminary terms of the Tesla stock split are a 20-for-1 stock split. That would be really incredible because at a roughly now $900 per share, $20 or a 20 split would not increase the market value of Tesla. We know that. We know how stock splits work, but it would basically mean Tesla shares would be selling for $45 a share, which is basically what TDOC is selling for. Oh wait, they're selling for less now. Anyway, that's pretty wild. It definitely make options a lot more desirable for Tesla and could certainly make it easier for individuals to buy in on Tesla stock, especially since right now, if you're trying to save up that one share, it takes a little bit of time to get to that $900. Of course, fractional trading is available on a lot of platforms, but not on every platform. Okay, great. So now let's quickly talk about the 3 lawsuits. So I've read these, and I want to start with the good news, okay? And then we're going to kind of like move over to the worst news. So the good news has to do with the Solar City acquisition. Take a look at some of the salient items here. In 2006, Elon Musk said that he wanted to accelerate the world to basically sustainable energy. And 10 years later, as part of this purported master plan, he ended up acquiring Solar City. However, several Tesla shareholders have alleged that this was a breach of fiduciary responsibility because the company had liquidity issues, Solar City had liquidity issues, financing issues, there were risks, and this was all discussed over an 11-day trial, there were risks that the company was going to essentially get margin called on their revolver credit lines, and the allegation is that Tesla was used to bail out an insolvent Solar City to help out either people that Elon knew because he was highly involved in the negotiations, or was related to because Kimball Musk was on the board of Solar City, who's his brother. So a lot of speculation about this deal. And the judge did rule on this deal. Of course, here's the conclusion of this, and then I'll get into a couple of the fun quotes that they mentioned. But listen to this. The process employed by the Tesla board to negotiate and ultimately recommend the acquisition for Solar City was, quote, far from perfect. Elon was more involved in the process than a conflicted fiduciary should have been. In other words, fiduciary has the best interests of shareholders in mind, not themselves in mind, right? And so Elon should have acted as fiduciary for shareholders for Tesla, although some could argue that maybe he has. But anyway, that conflicts obviously were not completely neutralized. With that said, quote, the Tesla board meaningfully vetted the acquisition, and Elon did not stand in its way of vetting the acquisition. Equally, if not more important, the preponderance of the evidence reveals that Tesla paid a fair price for Solar City. That Solar City was, at minimum, worth what Tesla paid for it, and the acquisition was highly beneficial to Tesla. Indeed, the acquisition marked a vital step forward for the company that it has been making for years to the market, this claim to the market that they want to be not just a car manufacturer, but also an alternative energy company. Therefore, the court's verdict is for that of the defense. The defense here is Elon Musk. That's because the board members of Tesla who were also sued had previously settled this lawsuit for $60 million. But Elon Musk kept fighting because he was getting sued for $13 billion. Of course, in which case, if he lost, it would have been a substantial issue, right? I mean, $13 billion. It would be liquidating a lot more Tesla shares. So really good news here. Some of the arguments that, and I read the entire thing here, some of the interesting points that the judge made is that, hey, look, Elon Musk talked in his master plan about wanting power walls and how when the Tesla board toured the first gigafactory that Elon had created, they discussed, even before the Solar City deal, the idea of acquiring a solar company so that way they could sell both power walls, power packs, and solar products. And that Elon believed that acquiring a solar company was the best way forward for doing such a thing. One of the problems, though, was that the vast majority of SolarCity's customers didn't have the financing in place to buy these systems, so they would take out loans from SolarCity, which led to major liquidity crises for SolarCity. Because think about it, they're putting on $25,000 systems that might cost them $18,000 to put up. And if the homeowners were financing most of it, doing zero down, cash flow could be an issue at SolarCity. And these were things that were evaluated. However, listen to this. With respect to solar installations, SolarCity exceeded its closest competitors, Vivint and Sunrun, combined. And with respect to costs, SolarCity's costs were actually 30% less than its competitors, and that they had $2.2 billion in retained net present value, which was pretty incredible. And these are very important stats for building the case that the SolarCity acquisition was fair. In fact, SolarCity was acquired by Tesla for $2.6 billion. Here, you have a note that as of Q2 2016, SolarCity had accumulated what is estimated to be $2.2 billion in net present value and retained value, using a 6% discount rate and assuming contract renewals, right? So very interesting that you really see the judge get into the cash flow numbers here. What are the values of the contracts, these solar contracts that they have? Rumors started flying around about the SolarCity acquisition, and there were lots of phone calls between board members and Elon. Elon like, what? You didn't know about these concerning significant liquidity issues, and the board's expressing concerns about due diligence. All of this stuff is actually really important because it goes to show that the Tesla board was really aware of what was happening. And so they decided, hey, you know what? Let's lower our offer for SolarCity because these liabilities, these issues are bad. And so let's offer SolarCity less money, below what we were originally expecting to offer. And then SolarCity ended up accepting that. And so this negotiation almost certainly helped in the judge's opinion that, hey, you guys found out about all the problems and then you asked for a price reduction. How is that not doing the best thing for shareholders? Now, they also put the SolarCity acquisition up to a shareholder vote, which caused a lot of controversy, so much so that Elon decided we need to sell SolarCity, sell the idea of the acquisition, right? And so he's like, hey, let's do a joint product demo of SolarCity's product in development, the Solar Roof. Obviously, Tesla's famous now for its Solar Roof, and that was a SolarCity product that Tesla ended up acquiring through SolarCity. Really, really cool to think about that. We think of the Solar Roof as a Tesla innovation. No, it was SolarCity and a Kimball Musk, in part product. A lot of talk online about this being a low premium deal, which is good. Others say no, it's a bailout plan. A lot of this sort of back and forth negotiation. But ultimately, what's really fascinating here is despite the fact that Tesla ended up in dire straits later with the Model 3 issues, which ended up leading to some share price pressure and these sorts of lawsuits, here's that $60 million settlement, the judge ended up ruling in favor of Elon Musk. And and one of the big reasons they saw was the synergies that this sort of deal would create for Tesla, specifically sales and marketing efficiencies. Hey, you come to us and buy a car? How about we sell you solar? Hey, how about we sell you a Powerwall? And that there's substantial value to cross-selling. Here you have, in 2020, Tesla reported an increase in cross-selling within the energy business as more than 40% of our residential solar customers opt for at least one Powerwall, which are very, very high products. And excuse me. The judge ends this with, whether the acquisition played a large or small part in Tesla's impressive growth is not clear, but there can be no doubt that the combination with SolarCity has allowed Tesla to become what it has for years told the market and shareholders it strives to be, an agent of change that will accelerate the world's transition to both sustainable energy by helping expedite the move from mine and burn hydrocarbon economy towards a solar electric economy. Crazy, amazing lawsuit. Let's now, folks, get on to the next one that didn't turn out as well for Elon Musk, but it's not as costly as $13 billion that Elon just avoided. Let's go. Now, these next two cases are pretty wild, and they're not that great for Elon or Tesla, but before we hit those, you can get up to $1,000 totally for free by going to public.com/ Meet Kevin. Sign up for a Public account and you can get up to $1,000 totally for free. Public is an investing platform that helps people become better investors in public markets. Members can build diverse portfolios of stocks, funds, and crypto within a single platform. And with Public, not only do you get all the tools and information that you want, but Public also has made stock investing social because you could see what other folks are investing in their public portfolio if you so choose. Go to meetkevin.com/public or public.com/meetkevin, either one you'd like, and make sure you get the opportunity to get up to $1,000 in free stock. Remember, they also offer over 29 cryptocurrencies alongside thousands of stocks and funds for those of you crypto curious members new to the space. Public added features like educational slideshows and volatility reminders to help educate you along your journey. Now remember, when you go to public.com/meetkevin, you'll receive a slice of a stock worth all the way up to $1,000. So go check it out and start investing now. Now, the next two lawsuits are amazing, and they have to do with a lot of drama that comes out from Elon Musk. The first has to do with Elon Musk and the whole funding secured scandal of 2018. So here's what happened. In 2018, the short and skinny is, Elon Musk said, hey, considering taking Tesla private at $420 per share, a significant premium over the low $300 per share Tesla was trading for at the time, which immediately led Tesla's share price to move up substantially. This was very interesting, though, because Tesla's board and a lot of Tesla executives claimed in interviews and depositions later that they didn't know that Elon had sent this tweet, which led the Security and Exchange Commission to say, hey, we'll settle with Elon, but the only way we'll agree to settle with Elon, rather than saying he's, manipulating the stock, even though funding didn't appear to be secured, Elon disputes this. Elon says funding was secured. That's in court as to whether or not funding was secured or not, TBD. But the SEC said, hey, look, you know what? We'll settle. And Elon says you need that banks were telling him, if you want a line of credit with our bank, you need to settle with the SEC. Like, we don't want to be involved with giving you financing while you're in this sort of legal battle with the SEC. So anyway, Elon Musk agrees to have his tweets reviewed before tweeting. So now every time Elon Musk sends a tweet, he has to get approval from somebody else at Tesla. And so Elon Musk has filed a lawsuit to suggest that it's not fair that he should have to have his tweets reviewed, that this is a suppression of his free speech. And this is called a motion to terminate a consent decree. Here is that particular lawsuit. The rule permits a party to relieve them from a final judgment, like a decree with the SEC, if the applying decree is no longer equitable. But it doesn't allow a party of a decree to say it's no longer convenient for us to follow the decree. So an example of this might be, let's say that you sign a paper saying that when you walk to work every day, you will walk over the grass and not on the sidewalk of somebody's property. But now, and I know that sounds like a weird thing to agree to, but let's say that was a settlement you agreed to, okay? Whatever, like, you can agree to weird stuff, but you agree to it. But now you break your legs and you're in a wheelchair. It's like, I can't get my wheelchair over the grass. Now it would be a significant burden, and it's no longer the same punishment for you to have to walk in the grass as it is for you to have to wheel your wheelchair over the grass. So instead, you would request a modification of that decree to reasonableness so that the burden is still the same. And there has to be some sort of significant change in circumstance to warrant this, something that occurs out of unforeseen circumstances. And so this is what the judge argues here. And then Musk makes the argument in this lawsuit that Elon Musk having to get his tweets approved is actually an intrusion of his First Amendment right to be free of prior restraints, that the First Amendment right is not to be infringed upon under any circumstance. And that the SEC has misused their opportunity to make sure that Elon Musk's tweets are approved to launch endless and boundless investigations of his free speech, and that this is now causing economic, or that rather when he made the agreement, he was under economic duress because banks were threatening to withhold lines of credit if he didn't agree to the settlement with the SEC, and therefore he was forced into this agreement. So he's basically making the argument that, hey, free speech, this is leading to harassment by the SEC, and when I made the agreement, I was under duress, which isn't fair. And so the judge here responds and says that none of the arguments that Elon Musk makes hold any water. The judge is not convinced. The judge even says that Musk concedes that his free speech rights do not permit him to engage in speech that could be, quote, considered fraudulent or otherwise violate the law, yet he made an agreement that when he tweets, he gets prior approval. Now, this might not be convenient for Elon Musk, but it is an agreement that he entered into. And the judge here believes that it's not fair for Elon to be able to go to court and just say, hey, I've agreed to give up a right. I've agreed to waive a right as part of a settlement. But now because it's no longer convenient, I want to change that agreement we had. The judge rules that, first of all, that's not fair. Second, the SEC considers his argument that the SEC, or Musk's argument that the SEC is harassing him. The judge considers this meritless and particularly ironic, they say. The judge says that you knew what you were getting into when you signed the agreement. How could you call it harassment when you agreed to have somebody check your tweets? And the judge goes on to say that, hey, Elon Musk, you're saying that this has opened up to a sheer number of demands from the SEC, but the fact of the matter is, according to this judge, that no, this has only led to 3 inquiries. 1, inquiries related to the original enforcement action. Number 2, inquiries related to the investigation that led to the amended final judgments. So basically this has to do with like, hey, we just want to make sure you're following the agreement we made, and any kind of changes that we're making in agreements that we have towards the final agreement, right? So like we have an agreement, changes have been made, these are things that are being requested on. Now, my guess is that Elon's annoyed because like any kind of original enforcement action could be like a peppering of like, hey, prove that your last 50 tweets you sent were, approved by somebody else. And it's like, oh, this is like annoying. This is like harassment, right? And then, of course, the third inquiry here is when Elon Musk ran a poll asking if he should sell 10% of his Tesla shares, something the judge here says would obviously create some form of question from the SEC. And so the judge actually says, hey, wait a minute, like, first of all, you gave up your free speech. You agreed to it. Number 2, the stuff they're bothering you about is stuff you agreed to. That makes this ironic and meritless. And third, your claim that you went through economic duress is, quote, wholly unpersuasive, and that Tesla was in no position to fight the SEC. But the judge here says, look, it's a fact that anytime you're in a lawsuit, whether it's with the SEC or not, it's going to cause distraction of management, lead to litigation costs, and ultimately be considered an undesirable event. So this is why they say here, no single SEC attorney can authorize a lawsuit, and it requires commission approval. So this right here, slam on Elon Musk. Elon Musk gets beat up and therefore says that the economic distress claim, the free speech claim, and all of the other claims are basically dismissed. It says right here, the motion to quash the subpoena and terminate the consent decree is denied. Signed today, April 27th, 2022. Now, unfortunately, this goes on because remember, this all started because of the whole funding secured scandal, right? So I'm going to give you the short and skinny on the funding secured one, and it's all right here. This is the page you got to pay attention to, page 39 of the lawsuit. Take a look at this. On August 17th, 2018, a New York Times article contained new information about the statement that Elon Musk made on August 7th. And it, quote, revealed that number 1, Elon Musk posted the tweet funding secured while driving himself to the airport. Number 2, he had been under a lot of work-related stress, and the private investment fund of Saudi Arabia, who was in talks to maybe fund the deal to take Tesla private, did not commit any cash. And this was in a New York Times article revealing information about statements that Elon Musk had made on behalf of Tesla. So this was an interview with the New York Times and Elon Musk. A lot of people don't like the New York Times, but that's what the judge is referring to here. And that the judge finds that funding was far from secure, and that people were concerned about Elon Musk's drug use at the time, maybe because of, smoking marijuana on the Joe Rogan podcast. Apparently, there was an hour-long interview with the New York Times, and that New York Times article, in my opinion, based on reading all of this, is really the big bombshell that changes a lot of this lawsuit in terms of the backstory of what happened here. And it really gives a little bit more clarity in Elon Musk's alleged, based on what the New York Times is saying, own words, that funding was not secured. And therefore, the judge ultimately decides that so far in this lawsuit about funding being secured, the funding secured claims are probably in the direction of misleading, potentially even false. So, not good. So we got one good news and two bad news here. One good news, Solar City, clear. $13 billion liability for Elon Musk, avoided. Elon's tweets still got to get reviewed. And, sorry Elon, the judge is not buying your argument that funding was secured, even though Elon still to this day can attest that funding was indeed secured. So the saga continues. Thanks so much for watching, and make sure to check out Public via the link down below. Thanks.